Hey, Rebel Bankers, welcome back to the show. This is Chris Noggle, your host, and I am so excited about today's guest because you know what we're going to talk about? We're going to talk about money, but we're not going to just talk about money in the traditional sense. We're going to talk about money in a way you've never heard about it. You always hear me talking about the secrets of the wealthy, the things that everybody should know that nobody seems to know about. Well, we're going to cover some of those. We're going to cover the 5 pillars of wealth, and I've got 2 experts here that are going to actually break this down, and we're going to have a ton of fun talking about money and how money works and how money works for you. So, gentlemen, thank you so much for being on the show. I'm going to let you both introduce yourselves to the audience.
All right. Well, Chris, so grateful to be on the show. This is Joey, the Italian stallion, Mure, as we talk about on our podcast. And as I was mentioning to you before, my family's all from Buffalo, New York, and run very deep. I'm a purebred Italian, man. That's why I have to be the Italian stallion. So just so you know, I've had plenty of good lasagnas and sandwiches and whatnot in Buffalo, New York. But so my background is in the mortgage industry, then turned financial coach with Wealth Without Wall Street with my good friend and co-host, co-founder, Russ Morgan. And I'm going to let him share a little bit about him.
Yeah, I love when you say rebel banker because there's nothing more that I think identifies Joey and I than somebody who does exactly the opposite. When you see our personality profile, it's like if you said white, we would say black, and we would say it before you even said white, just because that's the thought process. So that's cool that's the core audience. So yeah, I kind of like you, I come from a financial background as well. I like to say I'm a recovering CFP. For those that are not familiar with the financial world, that's a certified financial planner, which means that you really are supposed to know lots of things, but the reality is you know very little. And the financial markets tell you that on a repeated basis. So yeah, Chris, love to be on the show, and thanks for having us.
Honored to have you guys here. I mean, what better name than Wealth Without Wall Street for what we're going to talk about today? I think that's kind of that sums it right up. So for those of you that are listening or watching this show today, that's what we're going to talk about is wealth without Wall Street. And a lot of people don't even think that is a thing. And we're going to talk about that thing today. But let's talk real quick about all of your journeys to becoming a rebel banker. So I am the first one that acknowledges how difficult money can be in your journey with real estate. When you first come into this business, you want to do so many things. You want to jump in, you want to get your rentals, do your flips, but you know what? There's always that big barrier of entry called money. And in the beginning, it just seems like the most impossible thing. But then once you learn how it works and you start figuring this business out, which is what I try to do with this show, you realize that it's not as big of a barrier. As a matter of fact, money is everywhere. It's very easy to get if you understand the key principles of how money works. So folks, that's what we're going to do today. So I hope all of you get started on your journey, and it all starts with you taking that first step and you taking that leap. So this is the leap. This is your moment, and this is that time where you got to make that decision. Is it the red pill or the blue pill? All right, gentlemen. So let's talk a little bit about the 5 pillars of wealth. Tell the audience a little bit about what the 5 pillars of wealth are and what it is you two do, and then let's just kind of dive into each one of them.
So Chris, I think as a precursor to the 5 pillars, how we even came up with that, the 5 pillars of wealth without Wall Street, is we really kind of take it back to your psychology class. You remember Psych 101, we had Maslow's hierarchy of needs. Does that sound familiar?
I wasn't really very smart in school.
Neither were we.
Neither was I. Right over my head.
but you know, it's actually really logical thing. Maslow said that basically you're going to meet your most basic need before you move into something more complex. So, for instance, if you don't have food and water, you're going to do anything of your power to go and find food and water before you really worry about where you're going to live. I mean, so that kind of makes sense, right? I mean, you see someone that's homeless on the side of the road or whatever, they're not really worried about where they live because their primary objective every day when they wake up is, what am I going to eat? They're still trying to fulfill that basic need. Then and only then, once they have a sustainable way of eating and drinking, they say, oh, wonder where I'm going to lay my head tonight. Like, that's where that security comes from. comes from. And then, and only then do you think about relationships. And he kind of goes up this whole hierarchy that says, I'm going to, as I meet these objectives, I'm going to move into the next layer, all the way up to self-actualization is what he says. Well, what we did is we basically said, okay, there's a hierarchy to your wealth, and you can't move from one to the next without, fulfilling that baseline. And so anyways, I'm going to let Russ tell a little bit more about that.
Well, I mean, that is definitely a simple part. And when you think of that, if you're sitting there, you can Google it, because most of us have forgotten our psychology class from college. If you actually attended it and did not cheat off the girl next to you, I won't point fingers at the person sitting in the seat talking. But I will say that there's this process that we go through, and where we came up with that 5 pillars of Wealth Without Wall Street came first out of saying, all right, well, we have to have some basic financial principles, a basic hierarchy in which we're going to follow, and cash and cash values were kind of that basic thing. You talk about it a lot on your show. We've heard you mention it, the concept of becoming your own banker, and where do we get access to money and all of those things. Well, that cash flow is one of those main pillars that we have. It's how do we actually have cash for deals? How do we have cash to pay off debt? How do we have cash to just spend on a regular basis within our businesses and our investment opportunities? And then that kind of leads us into the tool that we use, and I know you're a big fan as well, as we use a lot of life insurance, and so that's our second pillar. Not your Uncle State Farm policy or the Northwestern guy that's pestering you in order to try to buy it, but it's the one that literally builds cash for you and not for everybody else. And then we go into, okay, once we have those 2 basic facts, and we can dive deep into all of those things, what are the three asset classes that's been around since the beginning of time, and that we see people building wealth? Kind of taking back my financial background into the 2004, when I study what people are successful do, where is their money at, and what are they doing with it? And it comes back to 1, real estate, right? What you guys know and do often. 2 is businesses, and 3 is lending. And it's funny, your show and the listener on this is probably trying to do all 3, try to make the real estate a business and or lending people money on real estate. So those are the 5 pillars, and we can dive as deep into it as you want.
And now we're going to do a commercial break. No, I'm just kidding. I got this little sound machine, and I'm going to try to use this thing throughout it because some of it's very relevant. So, well, let's actually start with pillar number 1. Let's talk a little bit about cash flow. I mean, there's this word that constantly is being thrown around. I think it's like the new buzzword, and I think it's a very misunderstood word, and that word is passive income. A lot of people are looking at passive income, and I watch all these different podcasts and these different videos on YouTube, and I seriously, and maybe I'm completely wrong in thinking this, but I think there's a lot of people out there that when they hear passive income, they literally think that means you're making money and you don't have to do any work at all. You literally just get to go sit on a beach, and all of a sudden passive income keeps coming in. But the last time I checked, I mean, passive income's a real thing. Mailbox money is a real thing, but passive income requires work. At least that's at least how I was brought up. And if I'm missing something, guys, please tell me. Because if there's a way to make passive income without doing any work at all, boy, I got to know that. But Let's talk about cash flow, because cash flow and passive income are so similar. Like, what are your thoughts on this whole thing with passive income? Because I seriously think people think that passive income means you don't work anymore. And the word work is, I think, misconceived too.
Well, it's funny that you say that. Like, every week we get together with our team, and one of the first things we do is we go through this creed. And the second thing of our creed is that we know the formula for financial freedom is easy, but the work to accomplish it is hard. And I mean, that is, financial freedom as we define it, I'm sure you probably agree, is, when passive income is greater than our monthly expenses. But like you said, sometimes people believe that passive part means I don't have to do anything. And that's definitely not what I've observed, both personally in my own life and as well as coaching, thousands of clients over the last 15 years. There's a lot of active work that goes into it. Sure, if you build a bunch of systems and processes, it can become more and more passive. And I think that's what we're all seeking, is passivity in that. But it's a lot of work to start off with.
No doubt. And I think the hard part about it is being educated. right? If you don't have the education and you're going to try to find this, like you said, it's kind of like this passive income that doesn't truly exist without work. The work goes into knowing where to put that money at work, or the work goes into being a student of what you're going to be investing in first, and then you're going to have it a lot easier on the back end. But the two things under cash flow that we kind of focus on, just kind of give a little bit more substance to this, is two things that are kind of unnecessarily being paid out from you. Like when money is flowing away from you unnecessarily, you're not in control. And unnecessarily so, right? If we can take back that control, then we can do more of what we want to do with that money. So we focus on debt strategies and on tax strategies, because in both of those cases, as you've talked about on your show many times, and even in the pre-show when we're talking, we have believed certain things about money that just are not true. And one of those is we've been taught by banks to give them as much money as we can for our benefit. And that would be like, oh man, I need to get a 15-year mortgage because I'm going to pay my house off so much faster. In the meantime, that is unnecessary cash flow that's going away from us to pay down a debt, and we're completely putting ourselves in the worst possible position from a risk standpoint and a control standpoint. And then from the tax strategy side, we cover the fact that, man, if I don't have to pay the IRS something, that's money that I can then be doing something with. I can do more deals with it, right? I can, we actually have a saying on our show that if I'm looking for money, it's right under my nose. It's in the form of overpaying Uncle Sam for something that he's not even really expecting from us, but we're doing it because we're not knowledgeable about strategies that we should be taking advantage of.
Well, and I think too that whenever you're talking about that and the education, the fact that you're listening to this podcast says that, one, you're willing to do what most people want, and that is to educate themselves. And we've learned this personally, Chris, is that in those two different areas, I mean, coming into my financial background, it was, there's only one way to do it. You pay, you save money in these type of accounts because that's what everybody does. You pay off your debts, or you buy your homes and stuff like this traditional way. And you pay your taxes this specific way. And it wasn't until we met different mentors along the way that we learned that not only were we giving away way more money than we had to, but there was a lot more opportunity that came with us having access and control of the cash flow. And so it's fun whenever you get to kind of find out those things and share those with other people. And cash flow is huge. It's what we all live on.
Oh, I agree. So, it's just all the stuff you're saying is just absolutely incredible. And I'll never forget the aha moments I had. Because, coming from Wall Street, you nailed it. We're taught that everything works a certain way, and this is the way it is, and it's the way it's always been, and it's what we have to do. But we got our little rosy-colored glasses on, right? We were drinking the Kool-Aid pretty seriously. We might have even had a drinking problem being, in the Wall Street world. I seriously think we had a Kool-Aid drinking problem. So going into this next topic, and you guys already started on it, but the pillar number 2 is, one, you guys are going to have to kind of contain me and keep me from going in the rabbit holes, because I'm so unbelievably passionate about this, not just because it's changed my life, but because I've watched it change so many people's lives in a way that they never dreamed possible. And everybody is just, here's the thing we always say from stage, we always tell people that we are taught and trained that money works a certain way. And that's all we've ever known. But then here's us saying that that's all wrong. Money doesn't really work that way. And my aha moment was in 2014 when I kept riding the financial hamster wheel or the roller coaster. I had money and then it was all gone. And then I had it again and then it was all gone. And I couldn't figure out why this kept happening, but I just kept using the same conventional knowledge that I'd been taught. And because I kept using that same conventional knowledge, I stayed on the hamster wheel. And then all of a sudden I went to an event and I learned what the wealthy were doing, what the elite were doing, and what the successful real estate investors were doing was the complete opposite of what I was doing. And when I learned that, I also started looking at it and saying, well, everything I've been taught in the financial world they never taught me this stuff. And then I realized they never teach you this stuff. This is that knowledge you have to seek out, which is what our listeners right here. And just so you know, my rebel bankers, my listeners, I call them my 5%ers, right? Because they're the 5% that get it and that are willing to invest their time, their money, their energy, and their effort to learn something new. The other 95%, I can't help. They're out there, they're not changeable because they just can't subscribe that things don't work the way that they've been taught. And they're not willing to sit there and look at what the wealthy do and realize that what the wealthy do with money is the complete opposite of what we've been taught to do. And then you got to ask that question of why. Why is it that we give up our good dollars today, call it 401ks, IRAs, everything that our advisors, our CFPs and everybody teaches us to do is give up our good dollars today to be paid back with weaker dollars later. Essentially, we are compounding the taxes on everything that we're doing, and we just think that's okay. But yet we do things with money that we would never do with things that money buys, don't we? We would never, ever buy a car and wait 5, 10, 15 years to drive that car. Would you ever buy a house and wait 5, 10, 15 years to move into the house? Or, I love what Brent always says, is would you ever buy a loaf of bread, put it in the freezer, and then wait 5, 10, 15 years to go take that loaf of bread out and eat it? That would be a nasty tasting piece of bread. That toast would be nice and freezer burned and you wouldn't eat it. But yet we do that with our money. So let's talk about what I deem and what I think, and I know you agree with this, is the biggest secret of the wealthy. And it has been around for 200 years and nobody seems to know about it. And I just can't figure out why. And I also can't figure out, and we're going to spend a little bit, probably too much time here. I can't figure out why the brokerages, the insurance companies, the ones that we got all of our knowledge as advisors, why they never taught us this. Now, I know the answer, but we're going to kind of get to that later. So let's talk about pillar number 2. And it's just insurance, but take it from there. And well, it's bring that book out in a little bit too.
Yeah, you said brokerages, and I think that's the part. I was listening to Robert Kiyosaki's book Fake the other day, and he mentioned like insurance brokers, financial brokers. He said when you hear that term, one of the things that resonates is that most of the time they're broker than you. And so when people tell me, hey, you're talking about this tool, you're talking about using life insurance, the thing that I've always been taught is a terrible place to put money, but yet you're telling me that you're putting in hundreds of thousands of dollars, you've got clients putting in that much and more. Why? And I go back to, hey, look, you got to understand that the things that we are using are not being taught to us by insurance companies, not being taught to us by the financial institutions, that they don't understand these things. When we call these insurance companies up and we tell them, hey, we're trying to literally put in $1 million a year and we want the smallest death benefit you absolutely will allow us to have, they act like we're talking in Spanish or French or German. They don't understand the language. We're literally having to explain to them what we're doing. And it goes back to, though, like you said, the rich and the wealthy, they do not different, they do the opposite. There's a great Seinfeld clip on that. If you Google, George at the little sub shop talking about doing the opposite. And that's what we see is that whenever our clients start looking at where, they've built wealth, they've become successful, they're real estate investors, they're entrepreneurs, and they've not followed the tribe. They've done the opposite their whole life, but yet they've been taught to do what everyone else is doing financially, and they know that it doesn't fit. But then when we start showing them, hey, just so you know, let's just look at the banks, for instance, and we can go to fdic.gov and we can pull up, the balance sheets of these banks, and you start seeing, Bank of America, Chase Manhattan,
Wells Fargo,
and you see 18, 22, 11 billion dollars in cash values sitting on these banks' books. We say, now, obviously, they know a little bit about money. There must be some reason why they're doing
might know
this.
Something we don't know, right?
Yeah,
exactly.
So that's the tool that we've learned. And again, it's not sexy, it's not attractive, but yet it really works. It's a tool that I shared with this guy many years ago.
Yeah, I think the aha moment for me was, and I think this can be a little bit misconstrued when people start hearing the term infinite banking or bank on yourself or these type of terminology, is they think that the life insurance is the end goal. right? Like some people would say, well, how does this compare to my 401k? And how does this compare to this? And how does it compare to that? And they're not comparing it to what it really is intended to be. And that is to save money, right? So if I'm going to save money, where can I save money? I'm not talking investing. Like what you're teaching on this show and otherwise is how to then leverage savings or other people's money in many cases to buy investment property and multifamily fill in the blank. That's the end goal of your savings. And so if we're really talking about it, competing with your savings account is not that hard, right? I mean, you're talking about potentially 0.02% returns right now with taxable on top of that. There's just not a whole lot of benefit we get for it, but we don't know that there's an alternative. And so that's the proper place for this. Like life insurance is just a replacement for your savings account. And it gives you more of what you want your money to do, right? It gives you the same access, the same liquidity, safety. It's growing tax-free, and it's going to be accessible to you tax-free even in the future. So you don't have to worry about compounding, like you said, our tax liability to the government. And it's always compounding, even as we use it for our next real estate deal. So that's why we love this. We've seen the Rockefellers do this sort of thing. We've seen big banks do this sort of thing. And we're just trying to take notes and then mimic it and then use it practically in our day-to-day.
Absolutely. And I don't even know how much more. I'm not going to say much more on it. I mean, if people want the truth, if people want to really see what there is out there and why it's being used, they need to they don't need to look very far. I mean, this is under their nose. It's always been under their nose. Every time they walk into a bank and they see a vice president, they don't know why there's so many vice presidents. But what they should know is a bank is very smart with money. A bank realizes that life insurance, whole life insurance, is a great place to park money, but they need bodies. They need lives to insure. And they found out, well, hey, if we make these managers vice presidents, they become an insurable interest for the bank. Therefore, the bank, which the bank is the owner of the contract, and with owner comes control. So the bank owns the contract, the whole life policy, and controls the money, and then gives the employee benefits, golden handcuffs, deferred compensation, whatever you want. What a win-win. I mean, they've been doing this for hundreds of years at levels like you mentioned that would blow people's minds. But yet everybody wants to sit there, and I'm sure you've had this happen. You're talking to people about this amazing strategy. The first thing in today's information world that they do is they Google it, and then they look for the one negative thing that's on all of the internet, like the only negative thing, because there's hardly any negative. They find that one negative thing and they say, oh, this is a scam. This guy, David Ramsey, sorry, had to do it, guys. David Ramsey, the genius, freaking idiot, says that you should buy term and invest the difference. Piss on that. Like that, that system never worked. It never will work. And why he still believes that works is beyond me. But anyway, they find that guy who writes one article and gets a couple followers to sit there and say, well, that's terrible. They're just selling whole life. And then that person sits there and focuses only on the negative. And I can't believe, and it's everywhere. And it just blows my mind that we live in a society where everybody's so focused on the negatives that everybody ignores the positives. Everybody ignores all the positive things. There could be on this side 1,000 positives. Tax-free, you have full control of your money, it's guaranteed, it can't lose, it does this, it does that. And then this side is one negative. And guess what they focus on? That negative. Or they listen to the person that's sitting there telling them all about how bad this is, and that person doesn't even understand it. We take information and we get our knowledge from people that are clueless, and we just think that that's okay. I mean, I could go on a rant about this, but it makes me sad. But at the end of the day, you got to realize, and you guys know this, we talk to 5%. We talk to the people. We can't change everybody's lives as much as we know we can and want to. We can only help the 5%ers, the people that are willing to see past what the average public is willing to actually take and see. And I think this is the greatest thing ever created. I don't even need to be the one to say that. It's been around for long enough where we've got the history on it. And people that aren't willing to see this or understand this and use this, it's just too bad for them. It really is downright sad.
To just continue our conversation on this, I mean, ultimately, if you're not willing to look at the opposite of what everybody else is doing, then you shouldn't expect any different results. Right. And I think that's where we've, unfortunately, our society is caught up in that herd mentality, and they're not willing to look outside of that. And so it does take the courage really to look outside of that and say, okay, I'm going to do something differently. I'm not going to just expect the same, different results doing the same thing.
Well, we had a mentor, he would quote the line that 5% of the people think 5% of the people think, 10% of the people think they think, and 85% of the people would rather die than think. When you go back to saying the people listen to this are 5%, that's the thinkers, right? That's those who are not just following blindly, right? There's things that we will say that are inaccurate, not on purpose, but we'll learn as time goes on, just like medicine and health and finance and everything else. We find out down the road things do change, and we constantly are adjusting and improving upon those. We use as many guides as we can to help us avoid making those mistakes, but we know mistakes will be made. Thinkers think, though. Thinkers are trying to find better ways to do things. And it goes back to, again, this is a tool. It's just like any other tool, right? Real estate is a tool. And that's our third pillar. It's just a tool. And we all know someone who can go buy real estate and turn it into gold. It's like, man, really? You guys bought that piece of property? You made that amount of money on it? And then we also know somebody like myself sometimes in real estate that seems to find the dog, that really find the one that
to the money.
Yeah, it gets flooded every single time, right? The renter skips town. I mean, you name it, it happens.
Yeah, please don't take advice on buying or selling real estate from either the two guys on this side of the camera here.
Yeah, leave that up to me, guys. Just leave that up to me.
Exactly, please.
But we know this just a tool, right? I mean, again, we love to quote Robert Kiyosaki a lot, and he says, there's no good or bad investments. There's just good and bad investors, right?
It's very true.
And the same thing's true with, life insurance is a place that we store cash in order to employ it into many things. And it's just that. We know people who have, done it very badly. They come to us a lot of times. They think they've bought what they, was told it was going to be this very specialized, overfunded life insurance policy, and it turns out to be the opposite. And unfortunately, that exists. But it's just a tool, and how you use it will ultimately be the most, will show how much value we'll truly get out of it.
Yeah, absolutely. And, I think Will Rogers said, the problem in America is not what people don't know. The problem in America is what people think they know that just ain't so. And God, is that not the truth? That's just like that is what my favorite quote outside of some things that Warren Buffett says, because there isn't a truer statement in the world, and I've lived that my whole life. People always trying to give me advice that have never done what they're giving advice on, and people telling me I shouldn't do something, or why would you do this? And then you ask them, well, have you done it? Like, what happened? Oh, I never did it. Somebody told me this, or I read this in an article. Sure you did. Really? Like, it's just, why? Who are you protecting? What are you up to? And what do you have to gain by thinking you know what you don't know? It just blows my mind. And the other hard thing too is, and I had this conversation with someone the other day, and we were talking about, IBC, the infinite banking concept. And he brought up some things, and he says, but there's bad, there's some bad press out there on it, some people saying bad things. And he read me one of the bad things, and I'm like, oh my gosh, yeah. I said, so what you're telling me is that we live in a perfect world, and no matter what industry you're in, there isn't going to be a bad driver in that industry, because every industry, everything, financial advisors, oh my God, the bad drivers out there. And, I'm like, what's happening here? And I just explained it to him. I said, even though we know how to properly build the IBC contracts, how to build the whole life contracts so they work, there are agents out there that maybe read one article and they think they know what infinite banking is, and they go and they write a whole life because they think that's all there is to it. And then they say, here's your infinite banking concept. But yet you have no money in year one, no money in year two. In year three, you barely have any cash value. It never operates and works like it's supposed to from what you read about infinite banking. And the only thing that really happened is that insurance agent sold you a standard-based policy whole life that he got paid a whopping commission on, when really the people practicing and doing IBC the right way, they take a 60% cut in commission. They build it the proper way for efficiency with the focus on the money, the cash, the banking, not the focus on the death benefit. I have never met a human being or a person in my life that cares more about dying than they do living and enjoying life while they live. And the first person I meet that cares more about the day they die than they do about all the things they're doing while they're living, then I'm going to have a changed opinion. But like, why are we so focused on the death benefit when we really just care about the living benefit, what we do with the money today? Because that's what matters. But anyway, again, I get on these rabbit hole, things down here talking about money. And let's move on to the next one, real estate, and then we'll kind of talk a little bit about business investing. So pillar number 3, real estate. I know we kind of touched on it, but what are some of your takes on real estate right now with where the market is? Because in my opinion, and I'll be the first to say, just because this is what I did in the financial advisory world, is I studied patterns. And Warren Buffett says, buy low, sell high, and don't lose money. But nobody seems to understand that simple concept because nobody sells. Everybody's like, oh, it's going to keep going. It's going to keep going up. My advisor said, keep the money there. We got some more room. What are you waiting for? Literally, like, what is so hard about selling your stock or your real estate? Why is that such a difficult thing? Because that's the only way you don't lose money. But with that being said, the same thing with real estate. Like, we are seeing all-time highs in real estate. What are your thoughts right now in that general sense of real estate?
Well, I'll go ahead and tell you, we are not going to be experts in real estate. That's why we have a community that we are drawing in the experts in those fields. Like, so Chris, I'm praying that you will be a part of our community going forward.
So I'd love to,
because you are an expert. What I can tell you is, in the market in general, is we're overdue for a correction. And there's way too much talk about the behind the scenes of the financial world. The things that led to the 2008 crisis and recession are really at the same levels as they were then as they are now, with derivatives and things that I don't even fully understand how to explain. But I know that it's just people gambling with our money and with no kind of real way for them to pay for it themselves. That stuff has been going on. It's kind of like they got a slap on the wrist in 2009 and 10, but they never took it away. It's like they left the alcoholic with the bottle right there in front of them and slapped their hand and said, don't drink it anymore. But yet they left the bottle there, and it's just gone right back to where it was. Yep. So I'm with you. I think we're at an all-time high, and I think, like I said, we're overdue.
Well, and the thing that, as Joey said very accurately, we won't give you any real estate tips. You ask us,
especially not on buying.
Yeah, do the opposite, and you could be well. But we do interview a lot of people in this space, and it's a common conversation in our community as to what they should be doing. And it goes back to, it's a tool, and we all know that you make money, like you said, on the buy, not on the sell. And so there are opportunities out there where people can be buying. There's a lot of things that we see. So we've got a lot of clients playing in the multifamily space, and a big partner of ours quit buying 2 years ago in that space. I mean, they've actually gone into Europe buying multifamily because they felt like the cap rates had gotten to a point where interest rates had gone above it, and it just got so competitive. But yet there's still opportunities out there. And like Joey said, the banks are, they got regulated and they got their hands slapped, but then all this shadow banking, the Quicken Loan space has just multiplied and is much bigger than it was before. And the derivative space, I heard Kiyosaki talking about on his book that we've got like 1.4 quadrillion or something like that in derivatives out there, which is almost 50% greater. The derivative market is where we were in 2007 and 2008. And all that is just fancy ways that they're playing with money that doesn't really exist. Yep. And at some point, the piper has got to be called. I mean, you're seeing the Fed today, actually rates were cut for the first time since 2008. Well, they don't cut rates when the market's going up, right? No, they start trying to cut rates when they see and they feel like things are going to be going backwards. We got manufacturing is lagging behind. You're seeing some areas that are definitely being hit. And so again, I'm not an expert in that space, but I'm with you. Like if I've been holding on to some property for a long period of time, and maybe I'm getting at that deferred maintenance part where I'm gonna have to start doing some repairs, and there's people out there who are trying to get in it for the first time and they're willing to overpay for it, maybe I want to get rid of it.
Yeah, and the funniest thing is it's so hard for the experts in the world to be the one that's saying now's the time, to be the whistleblower. That's a hard thing because, if you're wrong, everybody sits there and makes sure that that you were wrong. Oh, you were wrong about that. But somebody's got to do it. Somebody's got to blow the whistle and be the honest one that's going to sit there and tell the people what they need to hear, not what they want to hear. And right now, and I have been doing it for probably far too long, I'm the whistleblower. Love me, hate me for it, I don't care. I know it's coming, and I'm selling real estate. Like everybody else wants to buy. Well, Warren Buffett, I'm going to quote him again. He says, when others are greedy, be fearful. Well, there's so much greed right now. Man, I'm scared out of my mind. Like I'm just selling. And that goes into what he said. When the market's high, sell, sell high. So I have a hard time understanding why people don't do that and they don't see it, but yet everybody's like, no, it's going to keep going. This guy said it's going to continue on. The Fed's doing this. Well, the Fed is the one propping the markets up. The reason we haven't gone down yet is because of the Fed. Look, they're pulling interest rates. You don't think that's because they're trying to keep it propped up? It happens to be an election year. Ding, ding, ding. Actually, I got to have something on here for that. Yeah, that'll work. That'll work. It's an election year. Like, of course they don't want the markets to go down, but it's just get out, folks. Like, just park your money on the side. Cash is a great thing. You don't make any money. Put your money in cash. You want to make 4%? Well, everybody on this show right now knows a really, really, really good bank that pays you a guaranteed 4%. So if you want to learn about that really, really good bank that gives you full control, guarantees, and it's all tax-free like your good old-fashioned Roth IRA, you just heard about it, but yet you're blind to it. All right. Anyway, let's talk lending. Let's talk about lending because that's my favorite thing is lending. And that's what my entire book is all about is private money and where it's at and how lending works. And I'm just going to key this one off with this is I remember when I first got into real estate and I looked at all the guys that I was borrowing money from, the hard money lenders, all these guys were up on the stages. And I always said, I can't wait till I have enough money to be the bank. I can't wait to be that guy that makes that money while I sleep, that doesn't have to swing hammers, it doesn't have to deal with contractors, it doesn't have to deal with realtors, and I get to just lend money. All I got to do is have a whole bunch of money. I don't know if you picked up on that, but I was blind to the truth because I thought I needed all the money. But what I realized is banks don't use their own money, so why the hell would we be using our own money? And that's what this is all about. So let's talk a little bit about some lending because that's, I believe, pillar number 5, right?
Yeah, so lending is a kind of a favorite of ours and personal to me, to be honest. I mentioned I'd been in the investment space for a long time. I was helping my father-in-law who had inherited some Bank of America stock from his dad that owned a bank, and it ultimately had been bought out by Bank of America. And when he passed, he inherited this large balance of Bank of America stock. And of course, I didn't know a whole lot about the market then, but I pretended to be, right? And so I set up, the few little things I knew. So I created a stop loss for him. Well, in 2008, when the market started to dive, it triggered this Bank of America stock to sell. Now, I had never had the wildest dreams that it was going to drop more than 15%. So we had put it in there where if it did, it would just trigger the whole thing. And it did. And there was probably about a week and a half period of time my father-in-law would not speak to me because he was sitting in cash because his whole Bank of America stock portfolio had been sold. And of course, he thought just like, it was his dad's, asset that had been left to him, that Bank of America had been at $50 a share forever, paying a really good dividend at that time. And he thought, I just made the stupidest mistake ever. He already was questioning whether my wife should have been married to me, but this was really kind of the topper on this thing, right? And it took a little bit. But as the stock continued to fall, as we realized what was going on in the financial markets, and I think it hit somewhere in the $5 and $6 a share range. And he realized how much money I had made him. I became an instant fan favorite from that point. And they decided to keep me around since then. But it was funny that the end of that year is actually when my wife, who's a dentist, was in the process of starting her practice. And she started this dental practice, and they went to, ironic enough, to Bank of America and borrowed about $650,000. And I started learning that concept that you were talking about a second ago about becoming your own banker. And it was probably middle of 2009. My father-in-law was still sitting in cash because, we're fearful of what to be doing with the money at that time. And I said, you know what? I've learned about this concept of where families are lending money to each other. Here we are. We've got money with you just sitting at a bank earning, very little interest, if any. And my wife is actually borrowing money at 7-8% for this dental practice. Why don't we put these two things together and help the two of you? And so that was an instant thing that we did in our lives. And until my wife sold her dental practice and retired this year, she had been paying my father-in-law between $7,000 and $8,000 every single month. Which, funny enough, all we did is took that money and bought life insurance and did other family lending out of it. But it became a really thing really close to us to see how lending works. And we've seen it in multiple different fashions, but definitely one that I can kind of speak to.
Well, and my background being in the mortgage business, I'm very familiar with the lending process, very familiar with how banks make money as a result of that. And so what we're doing within the community is we're teaching people things like this, the strategies like within the family, keeping that money there instead of borrowing back our own money from the bank and them getting the benefit of it, right? So taking the family banking to a new level. We've had private banking people get on, talk about strategies and things to watch out for and things. Again, it's an education process, right? But I think at the end of the day, it is taking over the banking function in your own life. Mm-hmm. And what Nelson Nash, the author of Becoming Your Own Banker, you and I talked about before the show, one of our favorite books, he talks about how you can do that. You can, over your lifetime, even if it took you 14, 15, 20 years to take over the banking function in your family, in your personal life, then you should be in a position to start lending outside of that potentially. And so that's when we talk about lending, we're talking about in all aspects, whether it's at home or amongst people that are in need of those funds outside.
And Joey and I personally, when we've done mortgages, we've done car loans, we've
lent to the business. Loans. Yeah, absolutely.
Yeah, we've lent it to our business. I mean, lending is, it's age old, right? It's something that goes back to the beginning of time. The Bible talked about lending, right? That is one of the things that we know that, with businesses and real estate and lending, these things are going to be around. And those who have the goal make the rules. And our objective for us and everyone that we work with is helping them figure out, the goal is to have the gold and to be in control. And if you have that, then you can make those rules. And we know too, banks lend money to people not because they need it. It's because they want it. And like you said, we find times where we will use our cash and cash values as collateral, and banks will give us loans against those at much cheaper rates. And we've seen our clients leverage that. We've got clients that actually, you mentioned Warren Buffett, that have sold actually their home building business to a Warren Buffett subsidiary. And I watched them in the 2009 and 2010 range. They were borrowing money at 20%. And it seemed crazy at the time, but they were literally buying lots of land that nobody else wanted, and they were just stockpiling. And then 2011 to 2016, they built more homes in the Alabama area than almost any other home builder because they had the inventory. And they turned around and ended up selling and made a fortune. They looked like geniuses, and they were borrowing money at 20-something% at that time. So lending is an operation, whether you're going to be on one side over the other. Right. It's funny, if you can figure out a way to be on the right side of it, you can make a lot.
I think if those builders were truly genius, they would have been lending their company, their real estate company, money from their banking system, lending the money to their own company to buy that real estate, then charge their own company 20%. That company writes that interest off when it's paying back to them. That would have made them genius. But they were close. They were close, but everybody else would pat them on the back and say they were genius. But they were missing the machine, and the machine is what keeps the money working. And the other thing too with with lending, we talk a lot about the infinite banking concept and becoming your own banker and using this unbelievable banking system. But the other thing is, there's just some people out there that that they have all their traditional investment vehicles and they just don't know how to use them. But if you apply some of the same principles of being the bank and of lending to these traditional sources, all the places I talk about in the book, The Private Money Guide, your 401k. A lot of people don't realize that the best, smartest thing you can do in your 401k right now is to take a loan from your 401k. You can take 50 grand out of your 401k from almost all of the 401ks. They almost all allow them now. Take 50 grand out. You're going to then be charged interest of 5%. People don't realize that 5% in interest that you're paying for that. Everybody thinks interest, oh, it's a bill, it's a charge, it's costing me money. You're paying it back to yourself. Pay yourself back with interest. Take that 50 grand and lend that money out. Lend it to your company. Lend it out to someone for a real estate deal. Charge them 10%. You're paying yourself back 5% because that's what you have to. You're charging 10. What did you just do? Well, there's this thing called arbitrage where it's basically, I almost picture that as like arbitrage. You just made 5% for doing nothing different than what you were doing before. You could do the same thing. My mom, I grew up in a very low income household. My mom is the simplest person on earth, but we taught my mom how to basically have her house pay for her car. Now, how many people out there do you know that would love to have their house pay for their car? Because all people know about their house is it's the place I live that cost me money. Well, what if your house started paying for your car? And I don't care if you drive a Ford Focus or a Ferrari. Just buy a bigger house and your house can pay for your car. And then IRAs, the biggest thing outside of the IBC concept that is misunderstood is, I always use, I'm trying to think of his name, it's slipping in my mind, but he was a politician. It'll come to me. Mitt Romney stuck in my head, but that's not who it was. But anyway, self-directed IRAs, taking control of your IRA funds and learning the banking concept and learning how to be the bank with your self-directed IRA funds. I do it nonstop. I've taught all my friends and my family members how to do it. And literally every time they learn how to take their IRA funds and make 10 or 12% on that money, every time they get paid back, when a deal pays them back, it's almost like I created crack addicts. They're like, oh, I don't want the money back. I don't want the money back. Like, what do you need it for? Find something, because they get used to that. And they get used to making that kind of return. And whether it's your home equity line of credit, whether it's your 401k, whether it's your IRA, or whether it's your whole life insurance policy, which everybody thinks is a death benefit, and it is, but there's a whole nother side that people just don't understand, and most are unwilling to understand. And that's what your 5 pillars talk about. The 5 pillars of wealth, the wealth without Wall Street. I mean, it's just everything everybody needs to learn. The problem is we just can't spoon feed it to them all. So how do people, if they want to learn more about this, how would they get a hold of you? How would they learn about what you do and how to do some of these things we've been talking about?
Yeah, well, we would point them toward the community, because it's one of those things, as you said, when you're the 5%er, sometimes you feel like you're on an island. You're the only one doing this. There's nobody else out there, because if you go talk to somebody and they don't affirm you, sometimes even though you're different, even though you've been successful, it can be a lonely feeling. And so we created a community. It's called, you can go to community.wealthwithoutwallstreet.com and you can join other people out there, whether you're just now learning this for the first time or you really want to go deep into that subject matter. And those 5 pillars are in there. And so we've got subgroups that allow people to get access to, experts, whether it's in tax, real estate, lending, the infinite banking concept, you name it. And the goal is for everybody to learn and just grow together. So I'd love for them, obviously, to check out our podcast at Wealth Without Wall Street. On iTunes or Stitcher or whatever you listen to. And Joey and I love sharing the same thing we share with you, man.
Yeah, no, I think that's fantastic. And for all of you guys watching or listening to this, honestly, you owe it to yourself. You owe it to your family. You owe it to the family that you will have someday that you don't have today to learn about this. So check this out. Go to their podcast. The community that they have is phenomenal. Wealth Without Wall Street. Check it out. The things that you can learn, the secrets of the wealthy that you've never been taught, will change your life. So, gentlemen, thank you so much for being on the Real Estate Money School podcast today. It was a real honor. I could go on a whole nother hour, but unfortunately, I got to cut this off and get back to doing what I do on the day in and day out basis. So I really appreciate your time, guys.
Yeah, great for being on. Thank you for having us.
You're welcome. And for all of you listeners and watchers out there right now, Thank you so much for your time as well, because you know what? Successful people do two things really, really well. They invest their time, which you are doing right now, and they invest their money. And when you combine those two things, you will be doing what the wealthiest human beings on the face of the earth do. So pat yourself on the back for that. You're there. You're seeking out this knowledge. You're taking that step, and you're diving in for your journey into money and how it really works. So take the leap, get started. If you want to get into the banking or you need money, grab a copy of the book, check out all of these great podcasts that talk about this. And you know what? Your life will quickly change. So thank you for joining us today on this episode. We will see you on the next one. Thank you and have a good day.